Greetings, everybody. My name is Devin Brown, and this is my American History Project for Georgia Highlands over the stock market crash of 1929. What the stock market crash was a severe downturn in equity prices that occurred in 1929 in October. This happened during the Roaring Twenties in the United States, just after World War I. The crash of 1929 did not occur in one day, though. I gotta be honest with you. It was a step by step process. It was more or less 2 weeks long. But the first portion of the crash occurred on October 24th, a day known as Black Thursday. The following week brought Black Monday, October 28th, and Black Tuesday, October 29th. These were really bad days that surely led up to the Great Depression. See, originally, before this happened, the Dow Jones was at 60, and then it rose up to 400 because people felt that it was safe to purchase stocks. There was nothing that said otherwise that they were going to go back. Of course, Jesse Livermore said otherwise, but no one really heeded his warning, and that's just how that cookie crumbled. But pre-existing selling pressures and the fear in the stock market were exacerbated by a flood of sell orders that shut down the ticker tape service that provided stock prices to traders. With key information missing from the markets, selling intensified even further because people just didn't want to quit, and some people just didn't know how to quit. Despite a few attempts at recovery, the stock market continued to languish, eventually falling almost 90% from its peak in 1929. This was after the bubble boom. Just after the bubble boom. Everything was good. Everybody thought everything was going really well and wonderful. And then somewhere along the line, somebody or something got a little careless and that bubble just went. But the lead up to the October 1929 stock market crash saw equity prices rise to all-time high multiples of more than 30-time earnings, and the benchmark Dow Jones Industrial Average has risen 500% in just 5 years. This type of hyper growth has shown itself to be very unsustainable over time, as markets generally perform their best when they can grow steadily, not adversely and just out of the blue. This is how a lot of different cultures just fell off the face of the planet, not the place of the planet. Who says that? At any rate, it took over 25 years for the Dow Jones Industrial Average to get back to the highs of the 1929 market, as the U.S. economy suffered through what we could now call the Great Depression. Major new legislative and regulatory changes were enacted following the speculative bubble crash of the 1920s in an effort to prevent the same situation from happening again. But you see, the stock market crash of 1929 was some serious stuff. Just to show you a little better side of the whole thing, the 1929 stock market crash had a little bit of benefit for some people. Jesse Livermore correctly forecasted the economic crisis that shorted. He made over $100 million by just knowing that this was going to happen. Some way, somehow, he just knew this was going to happen. Joseph Kennedy, John F. Kennedy's father, sold his stocks before the 1929 stock market crash had even occurred and kept millions in profit. Kennedy decided to sell his stocks because he overheard shoeshine boys and other novices speculating on the stocks. Livermore and Kennedy were individuals who are known as smart money men, who profit regardless if the market is skyrocketing or plummeting. Those are men that you can really take a lesson from when it comes to paying attention to the stocks. But in the meantime, that's the project. Hope you guys like it. Hope you guys liked my voice. I love my voice. I'm going to be a little conceited about it. But in the meantime, I will talk to you guys later. Thank you for watching, and I hope you all have a blessed day.